This is Fintech Insider News. This week, the EU's Digital Operational Resilience Act is here. So what does DORA mean for our industry? Belvo and J.P. have teamed up to help Mexican businesses. And Nubank is coming to the UK, but maybe not in the way you might expect. We'll be discussing all of this and more on today's show.
Do you know the problem with keeping all your eggs in one basket? One slip, and they all come crashing down. And the same applies for where you keep your money. But don't worry, Insignis Cash lets you spread your savings across leading banks, maximizing security, flexibility, and returns. No more sleepless nights, no more smashed eggs. So get cash clever with Insignis. Visit insigniscash.com now to learn more and get started today. That URL again is insigniscash.com.
Hey there, Fintech Insiders. We interrupt your usual podcast listening to ask a teeny tiny favour. 11FS is in the running for Consultancy of the Year at the 2025 British Bank Awards, and a 5-star vote from you would absolutely mean the world to us. It has been a busy year at 11FS. Not only have we brought you over 120 episodes of Fintech Insider, our ventures team have also been very busy working with global brands to change the fabric of financial services, whether that's designing new digital wealth propositions to helping credit unions all over the world serve younger people better. And that really is only scratching the surface on the great work that the teams have been doing. If you want to help us out, head to 11fs.com/vote or click the link in the episode description to vote for 11FS and help us bring home that trophy.
Hello and welcome to episode 931 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. Once again, we've scoured the internet for the most intriguing stories from the world of financial services and fintech over the past week, and I'm delighted to be joined by a great panel of guests to help you and us make sense of them all. First of all, I'm delighted to have my 11FS colleague and co-host for today here in the studio with me, Dave Morris, Global Head of Technology at 11FS. How are you, Dave?
I'm good. Yeah, it's a bit of a manic start to the year, but all good and lots of projects going on.
And without spilling any secrets, can you tell us what any of those projects are related to? Or?
Yeah, a lot related to our sort of Foundry banking platform that we're working on at the moment and have been for last year as well.
Fantastic. Exciting stuff. Next, returning to the podcast, we are delighted to welcome back James Dodsworth, Senior Manager of Financial Crime at Thistle Initiatives. Welcome back to the show, James. Can you remind our listeners a little bit about what you do? And financial crime makes it sound like you're sort of leading criminal activities, so perhaps you can clarify.
Well, thank you for having me back, and I think that you said that to me the first time I was on as well. So thanks for reminding everyone of my possible criminal intent. No, thank you. I'm doing very well. So I am a senior manager at Thistle, working in anti-financial crime, but it's we can shorten that down a little bit and just drop the ante. So we help lots of clients with financial crime related matters such as fraud, AML, and sanctions.
Welcome. Thank you so much for joining us again. And we're also excited to have a Fintech Insider debut. So joining us via the power of the internet is Uri Tintore, co-founder and co-chief executive of Belvo. It's fantastic to have you with us, Uri. You've got some exciting news that we'll get into the second half of the podcast. But in the meantime, would you tell our listeners a little bit about you and why you started Belvo?
Thanks. Super excited to be here with you. So yeah, talking a bit about Belvo and what we do. Belvo is the leading open finance platform in Latin America. What we do is we help companies access financial data and move money in ways where before were complex and very expensive. We actually decided to start the business back in 2019 when my co-founder Pablo and myself, we were thinking about expanding another fintech from Spain to LATAM. And we found that the infrastructure we had to connect to was not existent and everything was extremely manual. So while expanding the business to Latin America was not a great idea, building that infrastructure was. So since 2019, we have been building the rails to enable financial data access to flow freely in Latin America. and variable recurring payments to be able to be processed in a very cheap manner.
Fantastic. Well, welcome. Okay, so we have a panel. Let's move on to the news. So our first story this week is that the European Union's Digital Operational Resilience Act, or DORA, has come into force. And this was reported in the papers. On Friday the 17th, DORA came into being, aiming to centralise and unify regulation with the aim of increasing financial resilience in the European single market. Financial institutions under DORA must implement measures to enhance operational resilience, including identifying and reporting risk processes and testing their own resilience to threats. The regulation applies to all financial institutions, including banks, payment institutions, electronic money institutions, investment firms, crypto asset service providers, and central securities depositories, as well as insurance and reinsurance companies, managers of alternative investment funds, and on and on and on, including credit rating agencies, basically everybody. It even applies to non-financial entities, particularly providers of information and communication technology services to financial institutions. So, Dave, this is huge. The financial service industry often sort of complains about regulation, but sometimes also accepts that it's necessary. Where does this fall? Is this regulatory overreach, or is this a overdue set of regulations?
For me, it's overdue. I think one of the challenges in a lot of the things that happened previously have been not consistent European-wide. A lot of things have been sort of transported across governments as opposed to being a EU-wide directive. This drives consistency, and it also means that it applies to everyone. I think you'd hope for most people, you could look at it at a high level, anyone in technology, and go, a lot of this is sensible, best practice engineering things you should be doing already. But I think for a lot of people, it wasn't necessarily done in the ways across everything for all of the systems and things like that. For DORA, it's important as well in it. It isn't in isolation. It ties together other things that are happening in the EU later in the year with things like PSD3. Where the push for resiliency on things like account information services in open finance and things like that, which previously had no resilience requirements at all. So a bank could quite happily say, we've got an open finance solution, but it doesn't have to stay up at all. Whereas this sort of pushes some of those things much more into it, to the forefront of the way people think. And also it pushes much more broadly, top to bottom, consistency across different types of organizations, where I think in the past you'd look at regulations like that were similar or pushing around the edges of this would have been heavily focused on the big banks much more. And this is now cross everywhere. And
it's everyone. James, what do you think? I'm tempted to ask you whether this is good news or bad news for financial criminals, but perhaps that's focusing it a little bit too narrowly. What did you think of this?
Well, I think I'd agree with a number of things that Dave said there. I think the concept behind this is quite a sound one. When you look at the what it's really aiming for, it's about reducing risk of fraud and cyber threats across a number of industries. So, with my anti-fraud hat on, I certainly see that as a positive thing. Anything that can be done to standardise defences against different cyber threats like phishing or ransomware, where we're seeing quite a lot of spikes in those and other malicious activities against firms. I think anything that pulls that together and gives it a standardisation is a good one. So I think the concept is absolutely sound. I think the interest is going to be in the execution, because as we've discussed, this is across a number of different industries, some of which may not be as mature as some of the ones that are used to seeing this level of regulation. So it's going to be very interesting to see now it's been implemented, how it's actually enacted and even enforced.
And for our listeners, James, is the UK included in DORA?
It does apply to a number of UK-based companies, yes, particularly financial firms that provide regulated services to the EU, or even third-party technology providers that serve EU customers or are working with EU financial companies. So it certainly does have an effect for a number of UK companies.
Uri, we sometimes see sort of European regulations or European Union regulations sort of getting adopted by other regions. Do you think we might see Latin America or other parts of the world maybe sort of following the European Union here? Have you heard any sort of discussions of DORA beyond Europe?
Personally, I haven't. I have to say that it is actually in some areas in Latin America, we're seeing some of the regulatory movements not only follow what we've seen in Europe or in the UK, but also moving at very high stages. In particular, in Brazil, I think all regulation around open banking has been extremely fast adopted. And we could see how the agenda of the central bank can adopt some of these new initiatives very, very quickly.
I can't help thinking about Dora the Explorer when we talk about Dora. I mean, I love the name. I think it's fantastic, but to me, Dora is just a cute little girl. But parking that, how expensive is it going to be to implement some of this stuff, Dave? I mean, how I mean, you're right. A lot of this stuff should be being done anyway, but how costly might this be?
It's another one of these things where you think, if I was working for one of the big four consultancies, I'd be rubbing my hands together on this stuff because they're gonna make a lot of money out of this for and also quite a lot of specialists in cyber security and other areas, because people will need help on a lot of these things because as James said, the maturity is very different across lots of organisations. The fact it's launched, this has been in the front of people's mind for 2 years for a lot of people. Any big regulatory change is massive for the big banks. It's massive costings. I remember when I was at BNP Paribas going through MiFID II and things like that, and the amount of money that was spent on regulatory change like that was just huge. This will be huge again for big organisations. But if you're already at the front of the maturity level, you would hope a lot of it is about you've got the right systems. It's about maturing policy and approach and procedures around that and getting the controls much tighter around it to align to DORA as opposed to fundamental changes in the organisation. I think if you're further down the maturity chain, this is a big, big impact for you. And going to take time for people. A lot of people have been working on it for a long time in the run up to its launch as well. And it's not finished because it's not finalised, and it'll continue to change. For sure over the next 18 months or more.
James, I'm going to throw an unfairly difficult question at you. So if this is too difficult to answer, that's entirely fair enough because I don't know the answer. Is this harder for small firms? I mean, for sort of, say, smaller fintechs, earlier stage firms that need to comply with this? Is it kind of easier if you're relying on lots of partners and you're working with partners for, various parts of your infrastructure and your security and so on, because they should also be compliant? Or is it harder because you kind of got to check that all of your partners are complying? Do you have any sense of whether this is a nightmare for little firms or whether actually little firms are probably going to be okay?
I suspect that there's a potential to be a nightmare for any size of firm, depending on your accountability under this. But certainly with smaller firms, I think we can expect, again, we're back to that maturity question, aren't we? And how much time has been spent on development of systems and infrastructure. How used are they to really following regulations such as this, where they may not have had to before? So I think we'll certainly see a lot more of an impact on smaller firms where, yes, they may have had 2 years to fall into line with this. I think we all know in reality that's not always the case. Smaller firms tend to get towards the end of that period and right up towards when it's going to go live and then go, hang on a minute, have we actually done anything here, lads? So I think we'll certainly see some of that as this comes into force, I think. There's going to be a lot of running around hoping that everything is in line, which is going to be interesting when the enforcement starts to kick in and we start seeing some action against firms for not complying with these regulations.
I think the small guys will be on the end of hoping that the enforcement doesn't look at them first, which typically it doesn't. It looks at the big guys first. So you'd think they're probably breathing a little bit, thinking they have a bit more wiggle room on that still.
Uri is sitting there looking very relaxed, and I'm guessing that's because you don't have operations in Europe currently, so you don't have to worry about this. Is that correct?
Correct, exactly. That doesn't impact us.
So, final thing, Dave. Is it fair to impose rules that aren't complete yet? Or is it just this is just good practice and you just need to get on with it?
I think a lot of it is good practice, and is anything around cybersecurity ever going to be complete, or is it going to be constantly evolving in the same way the threat is going to be constantly evolving? I think is how it is. You can't ever finish writing the rule books around digital operation resiliency because the landscape changes constantly. So I think it's, is it unfair to say it's not finished? Yeah, in the fact that it's not fully there, but equally, it's never going to be finished.
Do you agree with that, James? Cybersecurity is never finished.
Well, it's not though, is it? And this is the problem with regulation in this area. When we think about technology more broadly, is that it moves so quickly. We've seen it across a number of different regulations. The trying to keep up. We may discuss about APP fraud later, for instance, and trying to catch up with what criminals are doing is always a race that you may be constantly lagging behind. So I'd agree that this isn't going to finish. It's going to evolve as it has to. Unfortunately, it may always be a step behind.
Indeed. Well, let's just hope we manage to remain a step ahead of the financial criminals. Okay, let's move on to our next story, which is that the UK's payment systems regulator has unveiled its 3 key commitments for the final phase of its payment strategy. This was reported in Fintech Futures. So with 2 years left of its 5-year strategy, the UK's payment systems regulator, or PSR, has published 3 core commitments to foster growth, innovation and competition in the UK's payments landscape. These are to fully embed its authorised push payment, or APP fraud reimbursement requirements, work with the Bank of England to drive forward an update to the faster payments service and reform of pay.uk, and to build out its own innovation capabilities, including removing unnecessary barriers to payments innovation. Since launching its strategy in 2022, the Payment Services Regulator has said it's made strong progress in delivering positive change, including introducing protections against authorised push payment fraud, advancing open banking, and reviewing card fees. That sounds a bit like marking your own homework, saying you've made strong progress on delivering positive change on your own agenda. However, James, maybe I'll throw this one to you first. How successful do we think the payment systems regulator has been to date? Do you feel that it's really made an impact as a regulator? Have they managed to sort of drive forward open banking and bring in, really useful improvements to payment security?
I think certainly in terms of open banking, there's an argument there that it's been quite a success. I think, like you say, marking your own homework, there's further work to be done in relation to the APP fraud. Certainly, I think we're still in the very early days of that area and how that is looking. So I think it's a mixed bag at the moment, really. Some good work in some areas, but still quite a bit to do in others.
Maybe we can get a Latin American to mark the British regulators' homework. So, there was a time a while back where the UK was very much seen as a leader in open banking. From Belvo's perspective, are you looking at the UK market and saying, hey, there's some really interesting things going on in open banking? Or are you starting to say, well, actually, there's some other markets in the world that are looking a bit more interesting and we're learning more from in terms of the development of open banking? Where do you put the UK in the sort of rankings of open banking from a Latin American perspective?
We've probably seen the UK as the leader for many years since we started the company. We've seen the UK taking that leadership position. However, we're seeing other markets moving extremely fast. I don't have context on many different markets fastly adopting open finance. However, if we look at markets, for example, like Brazil, I believe Brazil has already overtaken the UK in terms of speed of adoption of matters. And I think there are a couple of reasons. One is the regulatory agenda is extremely clear and they're not going to be stopping. They are forcing things with a very, very clear agenda. But I also think that the market is probably needing some of these solutions even more than Europe or the UK. Just giving an example, I think when we were talking about open banking payments and the importance of account-to-account payments in Europe or in the UK, one of the main issues to adopt this type of systems is that the credit card network or the card network has interchange fees that are regulated and are pretty low. So from a merchant perspective, you're okay processing card payments. That's not the case in Latin America, where interchange fees can be super high. And that's why Pix, for example, has grown so fast. Today, Pix in Brazil processes more payments than the entire other payment rails combined. And
Wow.
that is massive.
Yeah, that's a huge thing. Thank you. Dave, variable recurring payments is one area where some people say, well, actually, the payment services regulator has been pretty slow. And, the UK's really kind of just fallen behind because the regulations just haven't come in fast enough. Is that a fair perspective? I mean, when we're looking at the payment services regulator, are we surprised they're not saying more about variable recurring payments? They're not moving those in faster?
And I think we are. That is definitely lagging behind as an area. We're still obsessed with, other approaches of, direct debits and things like that. And I think it comes to some of what Uri was saying around, it's a market piece in Europe and the UK where, people still have this view that their bank is the one place that they do everything, as opposed to it being an ecosystem of different things that work together. And there isn't that real push to say, actually, I want to move away from my bank being the one place that I manage all of my things. And even in a lot of cases, even when you go to a challenger bank, people are still, I've gone there, but I'm now with them, as opposed to, a much more ecosystem of open finance. And I think that's where, for me, variable recurring payments has been slow in its adoption. And I think it's something that needs to be pushed harder.
James, what about the these sort of new rules around authorized push payment fraud? And just as a sidebar, I really wish the abbreviation of authorized push payment wasn't app, because it's really confusing. But parking that, so the payment systems regulator sort of mandated all firms should reimburse fraud victims up to a maximum of £85,000. Is that kind of creating a moral hazard and just kind of opening up opportunities for sort of people to try and get no questions asked refunds and so on, or is this the right direction?
Well, this is an interesting one. I think before this went into effect in October, there was a lot of talk in the industry about exactly that. Is this going to be abused? Are criminal gangs going to target this? Lots of use of money mule accounts. Will we see an increase in first-party fraud? So, first-party fraud being the actual account holder deciding they're going to make a claim fraudulently against something they may have purchased or not. And I think from talking to a number of firms, that's not really been the case in terms of the numbers spiking. In fact, they've stayed pretty consistent from pre-implementation of the scheme, which is very interesting. I am hearing that a lot of it is moving the fraudsters over to more traditional card compromise fraud. So as fraud always is, you try and squash it in one place, it pops up somewhere else instead. So in that respect, it's been very interesting. I think the scheme is a sound one in that it's looking for consumer protection, but it does bring those risks of first-party fraud, the ability to abuse maybe the actual reimbursement scheme itself, because it has this 50-50 element for the sending and receiving banks as well. There's obviously for the smaller payment firms, a potential liquidity risk there if they get hit with a number of frauds that they have to pay up for 50% of. So it's still early days, I think. It'd be interesting to see how this develops over the course of this sort of first year as they look to review it.
I suppose it's easy to sort of sit here in the studio and sort of mark the regulator's homework and say, hey, they could be doing better here or they could be doing better there. But of course, it's incredibly hard to actually craft really good regulations that work, and particularly sort of think through, several steps ahead, particularly with, as you say, fraudsters and criminals, looking to exploit any kind of loophole. Dave, one of the other areas they were looking at was sort of the faster payments, which is, the UK's sort of account-to-account payments, so the payments you send from one bank account sort of go through immediately. I was sort of, I think if you're sort of looking at this, you're like, well, what's the problem with the faster payment service in the UK? Is, sort of, it works fine, I think. Do you see much to be done there?
It works fine from an outward perspective. I think internally for the banks and a sort of correspondent bank perspective, it's still challenging because it's not really changed. It's still the same, trust and hold the money. Whereas I think the approach they're trying to do in upgrading the architecture will shift that much further to be, not just, outwardly looking real time with a lot of batch underneath, to be much more real time in the way it shifts and be true account to account. Which will line it up closer to what we're seeing in the US with their shift on faster payments, with what's coming in Europe on their sort of faster payments initiatives. So yes, as you're an account holder, you go, well, it just works fine. Yeah, it's fast and it's gone, and I've got the notification from A to B quite quick, but it's quite a lot of work under the covers for the banks themselves in the way it's currently architected.
Yuri, do you think the UK should be learning from Brazil and PIX on this and in sort of enabling faster payments and faster transfers between sort of bank accounts and so on?
They certainly could. But it's also true that when you think about it and then you talk to the merchants, real-time payments is important. On the other hand, I think what's really important is not the money settlement, which it helps, but in general, today we're like one day way. So from a cash flow perspective, I think a merchant can handle that. It's about the confirmation, and other payment methods can also give you a real-time confirmation. So what you gain from getting the funds instantly settled, it is something, but it's not a massive win. And it goes to looking at what's the benefit for the companies who are processing payments. And if you go to a merchant and say, hey, move all your card volume to account so you can get the funds instantly, probably the improvement they get from a cash flow perspective doesn't outperform the big headache of moving their operation. So again, it's a market question. I think Brazil, for example, they are moving from a regulatory perspective also very quickly to saying, hey, the next frontier, once we do account to account on single time payments, it is on recurring payments. And I think that is an area that I believe that they could also learn a lot about how they are combining an instant rail like PIX with open finance technology to actually bring recurring payments to the market. But as I said before, it's very different for the UK to learn from Brazil, knowing that the benefit of account-to-account payments is very, very different. And in the UK, it is about transactions of big amount and fraud, etc., versus reducing cost.
Thank you. Very, very insightful. And I love that point about sort of confirmation versus settlement. I mean, we did some research on sort of open banking payments in the UK last year with Go Cardless. And one of the things that was really coming through very strongly from some of the merchants was we need confirmation of the payment. If somebody's walking into my shop and taking something out of the shop, I need that confirmation of the payment. I don't care about the settlement, but I need the confirmation. Okay, we're just going to take a quick pause here and we will be back very shortly.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Would you wear the same shoes for every occasion? Or rock the same outfit 7 days a week? Of course not. Your style is better with options. Your investments could be too. Cboe Index options give you access to various contract sizes, global trading hours, and potential tax advantages. That's a good look for any portfolio. If you're ready to invest in style, head to betterwithoptions.com. There are risks associated with Cboe Company products. Review the disclosures and disclaimers at cboe.com/US_disclaimers.
Welcome back. Before we return to the news, we wanted to tell you about our latest Insights show. Here at 11FS, we've been having many discussions with clients about loyalty, how to retain customers in a world where it's increasingly hard to do so. So to dive in further, my colleague David Barton-Grimley and I sat down with guests from two fintechs, Monzo and Yonder, both of which are doing fascinating work in loyalty, to get their thoughts on how their firms create experiences that foster customer loyalty. It was a really interesting discussion, and the podcast is available now. Simply head to the episode below this one in your feed. Okay, back to the news. So our next story is that Belvo and J.P. Payments are aiming to streamline direct debit payments for Mexican businesses. So open finance platform Belvo and J.P. Payments are partnering to enhance recurring payments management in Mexico, combining Belvo's open finance capabilities with J.P. Morgan's payment processing expertise. The collaboration enables businesses across industries like utilities, insurance, and all sorts of subscription businesses to access automated direct debit solutions, simplifying payment collection and improving efficiency. This integration aims to enhance the user experience, reduce payment errors, and improve customer retention, while offering features such as partial debit payments and more efficient settlement. J.P. Payments, which processes nearly $10 trillion, I'll say that again, $10 trillion daily worldwide, sees this partnership as a way to help Mexican businesses streamline cash flow management and support growth. So we're delighted to be joined by Uri from Belvo on this podcast. So big congratulations on this partnership. What can you tell our listeners about it?
Thanks. So we're super happy about it. I mean, it's been a lot of work that we've put together into this partnership. I believe J.P. Morgan has seen a very clear market opportunity, a very clear need in Mexico, as we saw when we launched our direct debit product or recurring payments product in Mexico. Account-to-account payments in Mexico exist. They're cheap, they're instant, but they have a problem. They cannot allow for recurring payments. You can pay through SPAY, which is the instant payment rail in Mexico, fairly easily, and improving the user experience might get you something. But when we're talking about repaying a loan, talking about subscription type of businesses, then the only available recurrent payment method is the card network. And A, it is extremely expensive for them. Second, not everyone has access to the card network. And for some particular use cases, particularly in lending, you cannot pay a loan with a credit card. So you're left out of options, right? And particularly many clients of J.P. Morgan are in this asking for solutions. And direct debit exists in Mexico, but it hasn't been, I would say, doesn't have the level of technology or product mature that it needs to fulfill the needs of the market. And that is what we are bringing to the market. And we believe that together we can address big needs of clients.
And of course, more and more of the things that people all around the world buy are buying on a sort of subscription basis, as we sort of subscribe to more and more things, and as people sort of stop buying things outright and start sort of renting things and so on more and more often. But can you tell us a little bit about what does J.P. Morgan bring to the party? I mean, aside from being one of the world's largest banks and having an enormous balance sheet, a AAA rating, and all of that stuff, what does J.P. Morgan bring to the sort of partnership with you? What's J.P. Morgan's sort of role within this? What do they enable you to do that you couldn't do perhaps without them?
It's mostly on the commercial side, and a lot of international clients have operations in different countries where they already get solutions from J.P. Morgan that allow recurrent payments. And the same clients need the same solutions in countries like Mexico, where J.P. Morgan cannot offer that to them. So on that sense, right now, the partnership is looking at them mostly on a commercial side of it, on Belvo allowing clients from J.P. Morgan to process payments. We want to make it even more broad and expand it to Brazil and other types of initiatives, which we're already doing. And obviously, it gives us the possibility of being part of J.P. Morgan's payment network, which is something pretty unique and can get us grow extremely fast.
Fantastic. Dave, what did you think of this?
I think, unless you deeply understand what's going on in Latin America, you look at it and go, what's this so important? Because if you look at the sort of European context, you go, why is this so important? Because we're so used to the world of, cheap interchange fees and the behemoths of, Visa and MasterCard owning the world of everything, even if you're going account to account. I think subscriptions on your debit card and things like that. But actually, I think, when you sort of step back and understand the dynamics of the market there, I think this is for me is a massive game changer to be able to actually give people access to the ability to do some of the things that they simply can't do if they don't have, debit cards, or people don't want to take cards because of the cost of acquisition on card payments and things like that. So I think it's really important to look at the context as opposed to looking from our mindset of why is this so big?
Absolutely, yeah. Looking at things with British eyes is not very intelligent. Uri, what do you think? What kind of impact are you hoping that this will have for sort of businesses in Mexico? I mean, who do you think is going to sort of embrace this faster? I mean, we're obviously used to sort of young city dwellers being the customers who embrace this kind of thing fastest. But what kind of businesses do you think will be most excited about this? Who are you hearing from already?
All types of businesses that need to collect on a monthly basis, on a recurring basis, are extremely interested in that. I mean, we have been in several conversations very surprised when we join meetings and we find 10, 15 people, and those teams are just the collections team of these companies. Why? But collections is extremely complex for companies in Latin America. So we're seeing lots of interest in subscription type of businesses, utilities, financial services, everything that is around lending. I think it's even more complex. So you have to deal with a lot of risk, and how you charge, when you charge is a science. Probably those are the industries where we're seeing more interest at the moment.
James, what do you think of this? Is there a sort of financial crime angle here? Is it easier to sort of spot financial crime when you're using a sort of open banking type payment systems? What was your view on this?
I think this is really interesting to see this, particularly again with, as you've mentioned, sort of European eyes, I guess, and what we're used to having over here. And I think it comes with a number of implications that I can see. I mean, possibly a move away from cash, which is typically is a good way if you're going to launder money, you get the cash going. But what they might see there is probably an increase in different types of fraud typologies as these new ways of making payments come into play. So I think it's a really good thing. I think it's a positive thing. Again, it's servicing a market that's changing, and what you really want to see from banking products like this is something that's going to benefit customers. Otherwise, it's not going to be a success. So if it can change the landscape there for the better, that's great. The flip side of that is it can be exploited, and I think it's one of these where we talked about maturity earlier. It's making sure that you have the controls and the ability to spot changes in fraud patterns as these technologies and different methods of payment come into play that are key. There's always, again, a race to get these out to customers because it's seen as such a beneficial thing that, as JP Morgan have probably noticed, can also be very financially sound as well. But it's my cynical side always comes into play, and I'm always like, well, just what are you letting yourselves in for here in terms of exposure, and are you ready for it, and can you spot it?
Really, really interesting. Uri, I mean, maybe you want to come back on that, and if not, I've got one last question for you, which is sort of why Mexico? I mean, obviously it's a big economy; it's one of the biggest economies in Latin America. But I'm curious why you've done this in Mexico first.
Yeah, and Belvo operates in Mexico and Brazil. So we've been operating in those regions since 2019. We started doing a lot of research around the payments landscape since 2020. And we've launched different products trying to improve the user experience when paying in different types of situations. And we've launched products that haven't taken off. We've learned a lot, and we have identified the biggest pain points in the market. I have a fun story on how we actually decided to build this product, which is we were focused on another one. And I asked our product manager, what what do clients tell us when we ask them about direct debit? And he said, I don't want to ask them because then they only want to talk about it. So that's just okay, let's switch gears and build that. The response has been massive. I think it's been a long process of understanding the market, talking to a lot of customers and seeing that was a very big opportunity.
Loving that. I'm loving the fact that you listened to your customers and pivoted because of what you heard from them. Wonderful. Okay, from one Latin American story to another. So Nubank's parent company is considering moving its legal domicile to Britain. New Holdings is reportedly considering moving its legal domicile to the UK to support a planned global expansion while maintaining its corporate headquarters in Brazil. Nubank, which is eyeing expansion into the United States, citing potential regulatory advantages. However, while interested in a European legal base in order to sort of recruit people, Nubank isn't apparently planning expansion into Europe owing to some of the regulatory and competitive challenges. The company is planning to expand into emerging markets that are similar to Brazil and Mexico within the next year and a half to 2 years, boosted by its strong profitability coming from its home markets. Yuri, it's natural to come to you first, given your familiarity with the sort of the region. Nubank is doing remarkably well. It's a global success story, but in Latin America. But what do you think of this? It seems like a slightly odd decision to move your headquarters to the UK, doesn't it? I mean, we don't even speak Spanish here, right?
Yes, and I mean, reading a bit the news, I mean, I think it is a bit more related to, tax, legal, and regulatory situations. Probably when, I don't know, you run a multi-billion-dollar business, you have like full teams analyzing this. I think we are very far away from understanding the rationale behind. So I personally don't have a clue on why they're doing it. Honestly, we've never explored, I don't know, there's not anything that relates moving to the EU or UK for Latin American companies.
James, do you have a spy camera in Nubank's headquarters that gives you any insights into why on earth they might be doing this?
Absolutely not. I'm with Yuri on this one. I think there must be some reasoning behind this that we're not privy to at this stage. And it's interesting, the comment around the EU, particularly maybe being a bit too restrictive in terms of regulation and so on, which, someone wanting to come to London at this stage is a bit unusual. It's not something we've heard since Brexit, really, and all those discussions around maybe the financial market powerhouse really moving from London over to the EU. So I would suspect there may be some tax implications behind this. I'm sure the government are having some nice discussions with companies such as this to see if it's something that can be done. And it's an interesting at a time when I think Santander have been making some rumblings in the market that they might want to leave London as well. So this could be a bit of a welcome boost if it goes ahead.
Dave, do you have any sort of theories on this?
I think none of us are sort of deep corporate lawyers and tax lawyers. And
we're struggling a little, aren't we? Yeah.
So, I think we are struggling. But I think, this is about their holding company, so where they're going to group together the various entities that they're going to put around the world. And, they'll be looking for somewhere where if that's domiciled in a particular country, it'll be easier for various people to accept that ownership structure and things like that. And obviously, I think the UK would probably land as one that makes sense from that perspective, because the breadth of acceptance for that will be easier for them. Tax obviously will be a big thing as well.
Uri, I'm going to fire a slightly easier question at you. So Nubank is apparently focusing on other sort of emerging and developing economies, akin to sort of Brazil and Mexico, whereas we've seen someone like Revolut, focusing more on developed markets. Why do you think Nubank is concentrating on those sort of emerging markets? Do you think that's a good strategy for Nubank?
Probably the way they've grown in Brazil is by being the first solution or the first financial service people get, and they've become extremely good at that. In many cases, and you see plenty of stories in Brazil, nobody else was offering financial services to an individual, and Nubank was the first. So I think that replicating this, you need to go to these type of countries. Whereas if you go to Europe, the problem to solve might be very different. That's my intuition, and I believe that because they're so good at doing that, they want to keep on it.
Yeah, I think that makes a lot of sense, doesn't it? It'd be moving into adjacent markets with sort of similar sorts of customers, similar sorts of products. Your solutions are just that much more likely to be embraced than if you go to, I don't know, Canada or New Zealand or somewhere. Apparently, they've sort of said that regulation is a bit of a sticking point, and so on. At that point you were making, Dave, about sort of Europe and so on. So that's maybe that's another factor. But on the other hand, they're also apparently looking at expanding into the United States. Is that, I wonder, James, could that be a sort of Trump-inspired, sort of bonfire of regulations that suddenly makes the United States a really attractive market?
I like any sentence that has the word bonfire and Trump in it. It's always a good one to roll out. I mean, certainly, I think we're going to see some interesting moves here. Maybe they've had their magic ball out and considered what the implications of this new presidency might be. I think we're seeing a lot of noise and a lot of activity coming out of the US in relation to crypto, certainly, with the stable coin and even Trump's own coins. Maybe I can digress slightly into a story around this in a second, once we cover this point off, because I've got a story around meme coins that might be quite interesting. Can we steer now? Okay.
Yeah.
Right. So, interestingly, I've seen with crypto, certainly meme coins. So you may have seen this, usually ludicrously named crypto coins that almost are set up and then spectacularly dive straight away. There's right now, I'm seeing with online streamers, particularly the younger ones, early 20s, that spend a lot of time streaming activities on the internet and making money out of that. Are clubbing together and moving into looking at meme coins, and they're making small fortunes in a very, very brief period of time. We're talking, millions in a couple of days. And unfortunately, these meme coins usually are only beneficial because they're taking the vast majority of people's money, and that's all been concentrated into just a few. But it's interesting to see the younger generation really embracing those, and maybe not in a particularly good way. I think it's there's a lot of dangers to those sorts of areas, and I think with Trump coming in, we're going to see a lot more of that. I think it could be quite a fast moving and also scary place to be around the crypto market in the next year.
Indeed. I think that's absolutely right. Well, that was quite a jump from Nubank to meme coins. However, it's a very interesting one. Okay, now for a quick review of one more news story this week that we don't have time to cover in full, which is that HSBC is to close its international payments app Zing a year after launch. According to reports, HSBC's international payments app Zing, which was launched in January 2024 to compete with fintechs like Wise and Revolut, is set to shut down after just a year. The decision follows struggles with compliance restructuring under Project Green, which aimed to enhance fraud controls and align with regulatory standards. Zing had initially planned expansions into the Netherlands, Singapore, and the United Arab Emirates, but internal challenges and cost-cutting measures under HSBC's new CEO, Georges El-Heldari, led to its closure. The app, which made a big splash when it launched last year, promised competitive exchange rates, low conversion fees, and multi-currency account options, but apparently failed to gain traction in a crowded fintech market. So I thought this was a very sad story because they'd done a lot of things right. They built a good app, but ultimately, coming into the market that late when firms like Wise and Revolut were so well established was making it really hard for Zing to win customers. Various reports said they had about 30,000 customers, which is really a drop in the ocean when you consider the vast numbers of customers that fintechs like Wise and Revolut have accumulated over time. And HSBC was spending a lot of money building it. By some accounts, HSBC had invested $150 million building it, which for 30,000 customers is not a great return on investments. But nevertheless, it's a really sad story, and it's always sad to see, when people in fintech and the industry are losing their roles. Obviously, I'm sure there's great people who will quickly find new roles, but a great shame. But it also points to just how difficult it is for big established firms to really compete with fintechs. It's really tough building a successful fintech, and the big firms are finding that every time they try. It's a real struggle. So sad for the people at Zing, perhaps not an entirely surprising outcome despite the great work they'd all done. So, and finally, we want to end with a story that we didn't want to finish the podcast without covering, which is that Barclays is winding down its fintech accelerator program Rise by mid-2025. So there was a headline that got a lot of people here at 11FS talking. Barclays launched the program in 2015 to support global fintech startups. And since then, Rise has graduated over 120 companies such as AppTap, WealthOS, iWarranty, and Alloy, offering things like resources, mentorship, and networking through locations in London, New York, and a virtual community in India. Barclays says that the fintech sector has evolved from niche disruptors to a core part of the financial ecosystem, prompting this shift. And so Rise is shutting its New York co-working space and handing over the London location to another part of the bank. However, according to Barclays, the bank will continue to support and invest in fintechs. So were we surprised to see this? James, is this another sign of fintech growing up, or is this more about Barclays?
I think it's probably a bit of both, and yes, it was quite a surprise to see this. I've been to Rise in London a number of times for events, and it's a real hub, got a real buzz about it whenever you're there, and it's given so many opportunities, I think, to fintechs to really succeed. So, trying to be positive on it, hopefully, it is a case of fintech growing up and maybe standing on their own 2 feet, and Barclays feeling as though that they've really helped there, and hopefully, as they say, will continue to do so in some capacity. But yes, it was certainly a bit of a surprise in the Thistle office when that popped up, because we're big fans of the place.
Uri, what's your perspective on sort of startup accelerator programs?
We have been part of some, and I believe that if they're properly structured, they can be of a lot of help to startups. So it's a bit of disappointment to see that. I'm confident that if the bank sees opportunities to collaborate with startups, they wouldn't need any type of official program to do so. So I think the opportunity to innovate and collaborate is still going to be there, but it's probably going to take a bit longer. And it's a pity, because the time it can shorten, it can be good, but you need, banks need to focus on these type of initiatives, and maybe it's a cost thing. I don't know, but first reaction is it's a bit of a disappointment, as there is value that can be created faster with banks, which is always very hard to partner with banks for startups.
And what did you think, Dave? Is Barclays putting a sort of positive spin on a story, or do you think they're sort of right that actually this is really a sign that fintech's grown up?
I think it probably shows that where fintech's grown up to an extent that it's easier to invest without having to sort of nurture things to the same extent that they did in the past with the accelerator programs and things like that. So they don't need the cost of the overhead of those programs that they've got now, and still getting the return on the investment of being able to invest still in different ways, which I think comes from the fact that probably the sector has got that maturity growth in there now, that means that they're seeing companies come through that they can invest in, that they can work on that. I can't see why, from any of what they've said, that they're going to reduce the way they're going to invest into fintechs. Just it's going to be done in a different way.
I suppose there's a lot more sort of angel investors and experienced former founders and other sort of mentors around now. There's a much stronger ecosystem for people who are launching another new startup. There's much more opportunity to get help than there was all the way back in 2015.
Yeah, and it may be that they've shifted. A lot of those things that when you're doing those sorts of accelerator programs, it's much smaller ticket investment. And maybe they're focused on much bigger ticket investment now is where they're going when they see the maturity coming.
All right. Well, on that sad note, we're going to wrap up this week's Fintech Insider News. Thank you so much to the three of you for joining me today. Where can people find out a little bit more about you and your companies? James, where can people find out more about you and about Thistle?
Certainly. Well, you can find me on LinkedIn, where I'm always talking about anything fraud related, and also at thistleinitiatives.co.uk.
And Uri, where can people find out more about you and about Belvo?
Yeah, I'm not maybe that active on LinkedIn. I should, but still I keep posting. So LinkedIn is a good place, but also we are pretty active with our blog at Belvo. So through our website, anyone can access it, and we share all the news about the company.
You are running a company, so I think you're excused from being super active on social media at all times. And Dave, how about you?
Yeah. LinkedIn for me. We are going to blow your LinkedIn up, though, Uri, I'm afraid, and all of the content around 11FS for me.
And as for me, Benjamin Ensor, you can find me on LinkedIn as well. Thank you so much to all of you for listening to today's Fintech Insider. If you like what you heard, please do follow us on your favorite podcast platform of your choice. Thank you so much for listening. We're always keen to hear feedback from you about what you'd like to hear in future shows. Please get in touch, search for 11FS or Fintech Insider, or email us at podcasts@11fs.com. So thank you again to my three panelists. Thank you to all of our listeners, and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.